Everyone treats Bitcoin like an investment. Charts, leverage, hype, price predictions.
But Bitcoin is an investment first. It's a mirror.
It reflects how you handle money, your discipline, your patience, your clarity. Before you buy Bitcoin, you need to understand money itself. Without that, you're just guessing.
So in the next few minutes, we show you the foundation, why Bitcoin exists, how financial system evolved, and what real ownership look like.
Let's start with history of money, because Bitcoin didn't appear out of nowhere.
Step 1. Gold. Money started as something rare, verifiable, physical. Gold had one job: store, time, and trust. It was hard to produce, easy to see.
But gold wasn't portable or divisible enough. You couldn't send it across a continent instantly, and that friction limited growth.
Step 2. Paper and banks. So we handed trust to central intermediaries. They issued paper money, kept our gold, convenience at the cost of control.
Then governments realized they could print more paper than gold they had. They broke the link between trust and reality. Inflation became invisible. Theft, your money bought a little less every year.
Exactly. Step 3. The digital era. The world moved to digital fiat. Numbers on screen, controlled by bank and central authority. Faster, yes, but even less transparent.
And in 2009, Bitcoin was born. Open, transparent, with a fixed supply, 21 million coins. Digital scarcity replacing physical scarcity.
So, Bitcoin isn't trying to make you rich quick. It's trying to restore economic trust. A peer-to-peer system based on math, not manipulation.
Now, let's talk about where people actually hold their Bitcoin, because that's where risk hides.
Most start on a CEX, centralized exchange. You buy Bitcoin, see your balance, and think you own it. But technically, you don't.
Exactly. On a CEX, your funds sit on someone else's wallet. You hold an IOU, it works until the exchange freezes. Withdrawals get hacked or collapses.
The alternative is DEX, decentralized exchange. This is peer-to-peer, trades settled directly on-chain, and you control the keys.
Then that's where your wallet, hardware or software, your true vault, it's not just storage, it's your identity to the crypto ecosystem.
So think on this way. On CAX, you ask for permission. On DAX, you participate directly. In your wallet, you own the outcome.
That shift from permission to ownership, that's crypto literacy.
Here's where Bitcoin becomes more than technology. It's mirror your psychology.
If you sell at the first sign of red candles, maybe you'll panic in other parts of life too. If you're ape into every new coin, maybe you chase novelty instead of patience.
Exactly. Bitcoin trains discipline. It punishes emotional decision and reward time in the market, not timing the market.
It's not just digital gold, it's a behavioral teacher. The mirror never lies.
The Hive strategy rule is simple. Understand before you allocate.
Because allocation without understanding isn't investment, it's speculation.
Yes, unfortunately, yes. When you truly get why Bitcoin exists, how centralization works, and how wallet empower you, you stop gambling with volatility and start building conviction.
That's how portfolios grow sustainably, through knowledge, not luck. So do you really know why Bitcoin exists?
Because within 5 years, understanding money history won't be optional. It will be basic literacy.
Direct message.
Basic.
For our full foundations of money and crypto guide on Telegram. Learn how money evolved, how Bitcoin fits in, and how to use it correctly.
Remember, Bitcoin doesn't reflect market.
It reflects you.
Exactly.